It's that time. Trade recap. Real quick. Today, I took two trades and I took two losses on XAU USD. The bias is bullish. Look how bullish gold is. All-time highs after all-time highs. Gold is in an expansion phase, so my bias was most definitely bullish. On the 4-hour time frame, we have this 4-hour swing low, 4-hour swing high. Around equilibrium of the dealing range, we have what? This new week opening gap, which is an imperatively important PD array. Price has had this mini consolidation and then manipulation down into discount of this range, tapping into and filling the new week opening gap, which was very nice actually. And on the 1-hour time frame, we can see it looks like a really nice market maker buy model. Look at that right there. We tapped into that, raided that 1-hour short-term low, and we've expanded higher, closing above this 1-hour sell-side imbalance, looking to target this original consolidation, relative equal high buy-side liquidity. So this 1-hour inversion fair value gap was the PD array in which I was anticipating price to trade away from to the buy side. So zooming in right here, we have this 1-hour short-term swing low. We push down into that 1-hour short-term swing low and raided that sell-side liquidity. This was a turtle soup in my opinion. And we've closed above the consequent encroachment of that 1-hour inversion fair value gap, which is a very bullish sign. So I was anticipating, oh, this is a 1-hour inversion fair value gap internal to external range liquidity to the buy side liquidity above. Now on the 5-minute time frame, I was looking for an entry. This is basically the dealing range, this 1-hour, this 5-minute swing low, because it raided this short-term swing low right here. I just didn't have that marked out. Swing low, swing high. We've pushed down into a discount relative to this dealing range. We've raided this 1-hour short-term swing low. And we've created SMT with silver. And also, we've just tapped down below midnight opening price, which is another important point why I thought price was bullish. You see, this is the New York midnight opening price. We've traded up here, we've gone back and forth, then manipulated down below it. I was looking at that as a very amazing discounted entry for smart money traders. But anyway, we've closed above this 5-minute sell-side imbalance here. We can see price pushed up into the consequent encroachment, traded back lower, and then immediately just launched through it very energetically, closing right above it. As soon as I saw that, I thought, yes, this was the 5-minute change in the state of delivery I needed to confirm that price is trading higher to the 1-hour buy-side liquidity that we saw on the 1-hour time frame. This was my prediction. I wanted to see price retrace down into this 5-minute inversion fair value gap, then trade higher to this relative equal high buy-side liquidity and the 1-hour relative equal high buy-side liquidity, which is basically the all-time highs. And I was going to take a partial here, maybe. 0.46%. We did get stopped out of this trade. Price did retrace down into the consequent encroachment. When I saw that and we rejected it, I was like, let's go. Price is bullish AF. But it wasn't. Price actually created a new low of the day. So that is one loss on the day so far. I did take another re-entry, same bullish as before, same bias as before. New York week opening gap. We've went down there. We've tapped into it. The only different thing now is that we've pushed down into a higher time frame dealing range. This 1-hour swing low to swing high. This was the dealing range I had marked out, and I thought, okay, that wasn't actually the low of the day. Price wanted to manipulate down deeper into discount of this range and then trade higher. And we have SMT with silver, which is important. Now the 15-minute time frame gives a more clear view of what I was thinking. This is the swing low. This is the swing high. In a discount, we have what? This short-term low. That was the order pairing low, which I thought price would raid and then trade higher. We've consolidated up here. Price has been bullish on this buy side of the curve. We're clearly bullish. Oh, let me go to the chart now, actually, because this will be easier to explain. This is the external range liquidity which I am anticipating price to trade to. This is that new week opening gap, okay? So we've raided this sell side liquidity right here. This is the smart money reversal. You could say this retracement into this new day opening gap is the low risk buy right there. So price has now clearly shifted order flow from bearish to now bullish. You can see we've expanded higher and then we've done what? Right here, we've consolidated. Can price reverse from a consolidation? No, price cannot. So when I saw this consolidation into this bearish price action, I was thinking to myself, this is not a reversal. This is a power of 3 manipulation to then trade higher. This is the consolidation here. This is the manipulation down into where? Discount of this dealing range, taking out this short-term low sell side liquidity and creating SMT with silver. So that was my thoughts on price action there. Discount below midnight opening price, raided this short-term low, order pairing, SMT, and now all I needed was the CSD, which was that 15-minute inversion fair value gap right there. When price closed above that 15-minute fair value gap, I was like, yep, we're good to go higher. I bought, market bought within the 15-minute inversion fair value gap. My stop loss below the swing low was too far for my liking. And I thought, price is ready to take off now. We're not going to retrace that deep into this 5-minute, 15-minute dealing range. So I feel safe with my stop loss below this candle's low. Let me go to the chart actually. This candle's low. Literally this candle right here. The 9 a.m. candle. This was the 15-minute inversion fair value gap. I went long just above consequent encroachment. And I put my stop loss below the 9 a.m. candle low. And you can see I was stopped out, unfortunately. Let me go to the screenshot. Yo, let me go. What's going on? Please. I can't move. I have to refresh the page. But I did get stopped out, as you can see right here. I forgot to take a screenshot of me getting stopped out earlier on, so I had to take this screenshot right now. But we did trade higher. You know, we traded higher very energetically. We just retraced down very deep into this dealing range right here. And I was not anticipating price to do that. But price did trade higher to this relative equal high buy side liquidity up here. And also the external range liquidity, original consolidation right here. So this is actually a very nice market maker buy model. It's actually very nice. And my bias was correct. So I'm not mad actually. I'm really not mad at losing these trades. This is the rejection block, which price retraced down into. Just short of this low. So that would scare any long holders actually with their stop loss below this low. And stop people like me out who trailed their stop loss too tight. Not trail it, but just placed it too tight. So that is it for today. 2 losses. And also on that second trade, I halved the risk. Because I've already taken a loss today. So you can see here, I had 0.3% risk. I was trying to risk 0.25, but I couldn't. I had to risk like 0.1 or 0.3. There was no in the middle. So I risked 0.3%. But that is it for today. The bias was correct. I'm not mad. Gold is absolutely bullish. It's still taking off to infinity and beyond. And that is literally it for today. Hopefully tomorrow I'll be able to make some of that back. We'll see. I won't force any bad trades. And we have FOMC tomorrow, so I probably won't be trading at all, to be honest. But we'll see how it goes, yeah? That is it for today. These are the receipts. Went long right there, got stopped out. Went long right there, got stopped out. Great stuff, guys. I'll see you next time.